Welcome to ICAN Academy YouTube channel. In this tutorial, I will examine the preparation of statutory financial statements of government in accordance with cash basis IPSAS. If you are coming across my lecture for the first time, please like the video, share it with others, and subscribe so that you don't miss my upcoming videos. If you are a returning subscriber, I say thank you for being part of this channel. Statutory financial statements. Components of financial statements include: number one, cash flow statement. Cash flow statements. That is statement number one. Cash flow statements. Statement number one. Two, statement of assets and liabilities. That is statement number two. Statement number two. Three, statement of consolidated revenue funds. Statement of consolidated revenue funds, CRF. That is statement number three. Four, statement of capital and development funds. Statement of capital and development funds. That is statement number four. Statement number four. Number five, we have notes to the accounts. Notes to the accounts. Notes to the accounts. Six, we have performance reports. Performance reports. That is number six. Seven, we have statistical reports. Statistical reports. That is number seven. Number eight, we have the accounting policies. Accounting policies. These are the components of financial statements. So, my focus in this video is statement of assets and liabilities. I will be examining statement number two. Statements of assets and liabilities. Statement number two. So, this is a statement of financial position. That is balance sheet of the federal government. Statement of assets and liabilities is the statement of financial position of the federal government. That is the balance sheet of the federal government. This statement highlights the various funds on the liability side. That is, liability side, we are going to have the various funds. We have funds under liability. These are what we are going to have as liabilities. The various funds, that is CRF funds, capital development funds, and any other funds. So you have various funds. They'll be highlighted under the liability side. While the investment and cash hedge against the funds are shown on the asset side. You are going to have the investment. The asset side, you are going to have investment and cash hedge against the funds. You are going to have this under the asset side. I want you to know that comparative figure for the previous year must be placed side by side with that of the current period. We are going to show the comparative figure. The previous year comparative figure must be placed side by side with that of the current period. That is statement of assets and liability. Format of statement number 2. Statement number 2. That is statement of assets and liabilities as at December 31st, 2024. If this is 2024, 2023 will be shown as a comparative figure. So we have the notes to the financial statements. So you start with assets. I've told you that you are going to have the cash and investment. You are going to have them as an asset. So you start with the most liquid asset. Liquid assets. That is, you start with cash. Cash held by Accountant General of Federation, which include Consolidated Revenue Funds bank balance. Consolidated Revenue Funds bank balance, that of 2024, and the comparative figure for 2023. Then we have pension accounts. Pension accounts. That is the Central Bank of Nigeria and banks pension. So we have for 2024 and the comparative figure. We also have cash balance of trust and other funds. Cash balance of trust and other funds. 2024 and the comparative figure. Then we also have cash balance with federal pay offices. Cash balance with federal pay offices. 2024, 2023 as comparative figure. We also have cash held by ministry and agency. Cash held by ministries / agencies. 2024 and 2023. Then by the time you sum up all this, you have this at the total liquid assets. Total liquid assets. Let me have that as A. Then after the total liquid asset, the net asset is investment and other cash balances. Investment and other cash balances. Investment and other cash balances, which include federal or state or local government investment. Federal or state or local government investment. You attach their respective note number, 2024 and 2023. Interest, 2024 and 2023. Then you have advances. All these are assets. Then we have revolving loans. Then we have intangible assets, intangible assets. Then you now add this. We have total investments, and other cash balances. Then you now add this to, let me have this as B. Then you have your A plus B. A plus B will give us total assets. Total assets. Then after total assets, the next section is liabilities. I've told you that under the liabilities, you are going to have the various public funds. The various public funds, which include consolidated revenue funds, consolidated revenue funds, balance, that of 2024 and 2023. Capital development funds, capital development funds, that of 2024 and 2023. Trust and other public funds, trust and other public funds. Then you have this and this. Then we also have police reward funds. Police reward funds. Then by the time you sum up all this, you have total public funds. Total public funds. Total public funds. That is the total public funds. After the total public funds, then we have external and internal loans. External and internal loans. External and internal loans include external loans to federal government of Nigeria, state government of Nigeria, or local government. External loans, that is loan to federal government of Nigeria or states or local government council or local government. So we have for 2024 and 2023 as the comparative figure. Then we also have federal government of Nigeria or states or local government council bonds and treasury bonds. Treasury bonds 2024 and 2023 as the comparative figure. Nigerian treasury bills, Nigerian treasury bills 2024 and 2023 as a comparative figure. Development loan stock, development loan stock 2024 and 2023 as the comparative figures. Then we have other internal loans. Other internal loans. Example, we have promissory notes. Promissory notes 2024, 2023 as a comparative figure. Internal loans from other funds. Internal loans from other funds. So 2024, comparative figure for 2023. So by the time you sum up all this, so you have total internal and external loans. Total internal and external loans. After this, we have other liabilities. Other liabilities. By the time you consider this, other liabilities include deposits, various other deposits, deposit liabilities. So if you add the deposit liabilities, then you have the total liabilities. And this must agree with the total assets, total liabilities. Total liabilities must agree with the total assets. So that is the format for preparing statements of assets and liabilities. Now, example, the following balances were extracted from the books of Dengepo State Government of Mana at 31st December 2018. We have the value for 2017, which is the comparative figure for 2018. And we also have for that of 2018. We have statutory allocation, 2017, 644,997, while 2018, 4,841,017. Value added tax collection, 2017, we have 119,102 and 160,133 for 2018. Internally generated revenue, 2017, we have 403,020 and 498,843 for 2018. Other revenue, we have 58,256 for 2017 and 79,397 for 2018. Personnel cost, 2017, 490,110 and 1,170,666 for 2018. Overhead cost, 2017, 280,095, 739,646 for 2018. Consolidated revenue fund charges, 2017, 137,081 and 382,936 for 2018. Other capital receipts, 2017, 246,400 and 379,237 for 2018. Capital expenditure, we have 394,969 and 2,753,553 for 2018. Other fund deposits, 2017, 591, 2018, 591. Cash at bank, 2017, 28,288 and 69,604 for 2018. Deposit with banks, 67,799 and 740,352. Then we also have investments, 62,772 for 2017 and 27,987 for 2018. Advances, 11,252 for 2017 and 74,407 for 2018. Additional information provided. The following amounts expended on unfunded internal debt servicing have been included in the consolidated revenue charges. 2017, 36,970. 2018, 45,364. Any surplus or deficit on revenue account is transferred to the capital account as appropriate. You are required to prepare A. Recurrent and capital accounts, B. Statement of assets and liabilities for the year ended 31st December 2018. So when you are preparing recurrent accounts, there are two elements that will be in the recurrent account. Recurrent accounts will contain the recurrent revenue, and the recurrent expenditure. Recurrent expenditure. So, recurrent revenue are the revenue that accrue to the public sector entity on a day-to-day basis. Any revenue generated by the public sector entity on a regular basis, that is from their day-to-day activities. Those revenue are said to be the recurrent revenue. Example of recurrent revenue include the statutory allocation, that is the share of federation accounts revenue. Then the value-added tax. Then if you have any internally generated revenue of that entity, so you have them as recurrent revenue. While recurrent expenditure are the expenditure incurred by the public sector entity on the day-to-day, on their day-to-day activities. Expenditure incurred on a regular basis, that is from the day-to-day activities of the government, we refer to them as recurrent expenditure. Recurrent expenditure include the personnel costs, the overhead costs, then the charges that are made from consolidated revenue. You have them all as recurrent expenditure. The balance in recurrent account will now be transferred to capital account. The balance in recurrent account, that is the excess of recurrent revenue or recurrent expenditure over the excess of this over this, or the amount by which expenditure exceeds revenue, you are going to transfer it as to capital account, that is balance brought forward, which is the amount you have here. Then capital account we also contain two elements. We have the capital receipts and capital expenditure. Capital receipts are the receipts by the public sector entity from the tangible non-current assets, or the income realized from the disposal of the asset of the public sector entity. We refer to them as capital receipts. So maybe there are sales of government investments, sales of an asset of the government, that is profit from disposal of non-current assets. Then the sales of the public sector entity. So their proceeds from the of capital nature. All proceeds of capital nature falls within the capital receipts. Capital expenditure, on the other hand, are the expenditure incurred on an asset. Expenditure incurred on assets. So that is expenditure incurred in the acquisition of non-current assets, expenditure incurred in the construction of boreholes, construction of roads, or capital expenditure. You have them here. So you have the difference. So you have that as a capital. This difference, the balance will be transferred to the capital development funds. This balance will be transferred to capital development funds accounts. After this, you also have internal debt service component of consolidated revenues. You are going to consider the internal debt service component of consolidated revenue. You have them here. So this is the summary of recurrent and capital accounts. Now let's have the solution to this question. The name of the public sector entity is Denge Post State Government of Mana. So now let's have Denge Post State Government of Mana. So now I want to prepare consolidated financial statements. Now let's have consolidated financial statements for the year ended December 31st, 2018. So we will have a column for 2018, then 2017 as a comparative figure. 2017 as comparative figure, amount in thousand. So you'll be starting with recurrent accounts. Recurrent accounts. I've told you to prepare your recurrent accounts. You will start with recurrent revenue. Recurrent revenue. Remember, I've told you that recurrent revenue are the revenue generated by the public sector entity from their day-to-day activities. Now, to go back to the question, recurrent revenue include statutory allocation 2017 644,997 and 2018 4,841,017. So statutory allocation. We have statutory allocation. 2017 amounted to 644,997. Then that of 2018 is 4,841,017. Back to the question. Then we have value added tax collection. This is also a revenue item. 2017, we have 119,102, and 2018 amounted to 160,133. Value added tax collection. Value added tax collection. 2017, 119,102. 2018, 160,133. Back to the question. You have internally generated revenue. This is also a recurrent revenue. 2017, you have 403,020. 2018, 498,843. Internally generated revenue. Internally generated revenue. So, you are dealing with recurrent revenue. 2017, 403 and 20. 2018, you have 498,843. Back to the question. We have other revenue. 2017, we have 58,256. And 2018, 17,397. Other revenue is still a recurrent revenue. Other revenue. If it is capital receipts, then you'll be told. Other revenue, 2017, you have 58,256. 2018, we have 79,397. Back to the question. So we have personnel cost. This is the charges. It's a recurrent expenditure. Overhead cost is also a recurrent expenditure. Consolidated revenue funds charges. Because of the word charges there, it's not a revenue. It's a cost. It's a charges. It's an expenditure, recurrent expenditure. This is the capital receipts. This is the capital expenditure. Others are assets and liabilities. So now let's sum up our recurrent revenue. Now, we want to total our recurrent revenue, 644,997 plus 119,102 plus 403,020 plus 58,256. So you have 1,225,375. 1,225,375. This is the total recurrent revenue. Total recurrent revenue. Let's have that as A. That of 2018. We probably want to sum it up. 4,841,017 plus 160,133 plus 498,843 plus 79,397. So our recurrent revenue for 2018 is 5,579,390. 5,579,390. After recurrent revenue, the next item is recurrent expenditure. Now let's have recurrent expenditure. Recurrent expenditure, I've told you, they are the expenditure incurred regularly in performing the public sector activities. Recurrent expenditure are regular or day-to-day expenditure. The regular or day-to-day expenditure incurred by the public sector entity. Now back to the question. So after the revenue, then we have personnel cost. It's a recurrent expenditure. 2017, 490,110. 2018, 1,170,666. Now we have personnel cost. Personnel cost. 2017, 490,110. 2018, 1,170,666. Back to the question. We have overhead cost. 2017, 280,095. 2018, 739,646. Overhead cost. Overhead cost. 2017, we have 280,095. 280,095. Then 739,646. Back to the question. You have consolidated revenue funds charges. 2017, we have 137,081. 2018, we have 382,936. This question is obtained from ICAN study test, public sector accounting and finance. So now, consolidated revenue funds charges. Consolidated revenue funds charges. Consolidated revenue fund charges 137,081 for 2017, and that of 2018 is 382,936. Back to the question. We have other capital receipts. This is not a recurrent expenditure. Capital expenditure is not recurrent expenditure. If you go through the question, other items are all about assets and liabilities. That means we are done with the recurrent expenditure. Now, let's sum it up. Total recurrent expenditure. Let's have that as B. So, 490,110 plus 280,095 plus 137,081. That is totaled 907,286. 907,286. That of 2018. Then we have 1,170,666 plus 739,646 plus 382,936, and that is totaled 2,293,248. 2,293,248. That is B. Now, you now subtract your total recurrent expenditure from the total recurrent revenue in order to get the surplus or deficit. Surplus, or if it is negative, deficit. That is, it will be a deficit if your recurrent expenditure exceeds the recurrent revenue. A surplus if recurrent revenue exceeds the recurrent expenditure. Now, 2017, we have the recurrent revenue of 1,225,375 minus recurrent expenditure of 907,286. So we have the surplus of 318,089. Then for 2018, we have recurrent revenue totaled 5,579,390 minus total recurrent expenditure of 2,293,248. You have the surplus of 3,286,142. 3,286,142. That is the surplus. Surplus is A minus B. Remember, our A is the total recurrent revenue, while B is the total recurrent expenditure. The balance obtained, the surplus obtained from recurrent revenue accounts will be transferred to capital accounts. Now, let's have capital accounts. Capital accounts. Capital accounts. Then you are starting with the opening, the balance from recurrent accounts. Transfer from recurrent accounts. Surplus transferred from recurrent accounts. We have surplus of 318,089. Then we have surplus of 3,286,142 for 2018. Then after this surplus, you go through the question to ascertain if there are other capital receipts. I've told you that capital receipts include the proceeds from disposal of an asset, the sales of government investment, their proceeds, the sales of government assets, the proceeds from it, you have them as capital receipts. Back to the question. Now, after the recurrent revenue and expenditure, you have other capital receipts. 2017, you have 246,400. And that of 2018 amounted to 379,237. So we have other capital receipts. Other capital receipts. Other capital receipts. 2017, you have 246,400. 246 400. 2018 you have 379 237 237. Back to the question, do you have any other item of capital nature, any receipts of capital nature aside the other capital receipts? Then we have capital expenditure. This is an expenditure. Other funds and deposits, cash and bank, all these are assets and liabilities. There are no other receipts of capital nature. So you now sum up your capital receipts. So you have total. Let's have total 318,318 and 89 plus 246 400. So you have 564 564 489. Then that of 2018, you have 3,286,142 plus 379,237. Then that is totaled 3,665,379. 3,665,379. This is the total capital receipts. After the capital receipts, you consider the capital expenditure. Capital expenditure. I've told you they are the expenditure incurred in either acquisition or construction of non-current assets. Expenditure incurred in acquisition or construction of non-current assets, they are capital. Back to the question, you have any other capital expenditure? Then you have capital expenditure. 2017, you have 394,969. And that of 2018, you have 2,753,553. This is the only expenditure of capital item we have in the question. So we have 20 capital expenditure, 2017, 394,969. 394,969. Then 2018 capital expenditure 2,753. 2,753. 553. Then the expenditure, the receipt or income is greater than the expenditure. So you'll be having a surplus. And this surplus will be transferred to capital development funds. Now let's have capital. That is the balance in capital development funds. Capital development funds carried forward. So since capital account is a development funds account. So we have for 2018, 3,665,379 minus 2,753,553. 2,753,553. Then you have the balance of 911,826. 911,826. That is the balance for 2018. That of 2017, you have 564,489. 564,489 minus 394,969. Then you have 169,520. Let me reconfirm. So 169,520. After the balance that will be carried forward in the capital development funds account, then you are going to have internal debt servicing component of consolidated revenue. Internal debt service component of consolidated revenue. Now, back to the question. That of 2017, we have 36,970. 2018, we have 45,364. So you only state it. 2017, 36,970. 2018, we have 45,364. So this is the end of the solution to the first part of the question. Then if you go back to the second part of the question, you have to prepare the statement of assets and liabilities for the year ended 31st December 2018. You want to prepare statement of assets and liabilities as at the year end is December 31st, 2018. I've told you that you are going to have 2017 as the comparative figure. So the 2017, the comparative figure. So you start with assets. I've told you are going to you are going to arrange your assets in order of their liquidity. Starting with the most liquid asset. The most liquid asset is cash. Cash. Now, go back to the question. You have cash at bank. 2017, we have 28,288 and 69,604 for 2018. Cash at bank. Cash at bank. 2017, 28,288. 2018, we have 69,604. The next asset is deposit with banks. The money deposited by the Dengepo state government with the bank. That means they are having their resources with the bank. The resources they have with the bank is their asset. So deposit with bank is an asset. 2017, 67,799. And 2018, you have 740,352. Deposit with bank. Deposit with bank. 2017, 67,799. 2018, you have 740,352. Back to the question. You have investments. Investments is an asset. Investment is an asset. 62,772 for 2017. 2018, we have 27,987. Investments. 2017, we have 62,000. 772. 2018, we have 27,987. Back to the question. After investment, we have advances. Advances, 2017, 11,252. And 2018, we have 74,474. Advances, 2017, 11,252. And 2018, we have 74,474. Now, that's all about the assets. Now, let's sum up the assets. Our assets is total assets. 2017, 28,288 plus 67,799 plus 62,772 plus 11,252. Our asset is total 170,111. For 2018, we have 69,604 plus 740,352. Please, 27,987 plus 74,474. So we have 912,417. Make sure you drop the love emoji if you love this video. Then after total assets, we have liabilities. Liabilities. I've told you that the liabilities to consider, we have the public funds. Public funds, any funds you have, they are liabilities. Then for our consolidated financial statements, we have capital development funds carry forward 169,520 and 911,826. So we have capital development funds. 2017, we have 169,520. 2018, we have 911,826. 911,826. Back to the question. You have other funds, other fund deposits. All funds are liability. 2017, we have 591. 2018, we have 591. Other funds deposits of 591. That is all about the items of liability. Then you sum it up. So 912, 911,826 plus 591. Then you have 912,417. 2017, 169,520 plus 591. That is 170,111. The total liabilities agree with the total assets. This marks the end of this video. Please help me to drop the love emoji if you love this video. Thanks for watching, ICAN.